Welcome back to the channel. You're joining me, Jason Pizzino, with your hopium-free crypto update. Let's take a look at Bitcoin as it's been rejected at that critical 50% level, the $43,000 level, and it is struggling to maintain the next support level. So we'll take a look at that on the chart, what that means in the short term. Hopefully we've got some positive signs there for crypto, and of course the macro, the long-term picture, the weeklies, the monthlies, and what we can do about it as investors. But first, do that good thing down below, like and subscribe. You know, we hate asking for it, but it does help out in the algorithm. And of course, check out the video sponsor, Bybit. Link is in the top of the description. Up to $4,000 using that link when you sign up and deposit at least $10. One last major announcement. Live event is coming up next Friday, the 29th of April here on the Gold Coast. If you want to join myself and the legendary Australian economist Phil Anderson, check out the link in the top of the video description. There are some tickets left. We'll see you there next Friday afternoon if you want to join us live for that special update. Let's start with the Bitcoin chart. Now we're going to check out what's going on in the rest of the markets because this has obviously taken effect from the traditional markets. But so far we can see Bitcoin getting rejected at exactly 43,000. We were hopeful of a close above the 50% level, 43,395, to maintain the bullish sentiment. This is basically the correction move, so that's halfway point. It got rejected and now we're all the way back down below the major 50% level from the move up from January into that peak in late March. So we're underneath that. That's $40,600. Now, the viewers of the channel, you were following the last couple of videos, been looking at some major macro bearish structures, which take time. They don't happen overnight. Even this little play here will potentially bounce back and give us some sort of relief. Maybe we'll test some $44,000 level or hopefully a $50,000 level. But macro pictures take months, take many months. And so we're just watching what the whales are doing, moving the market backwards and forwards. And you could look at this as scalping. So they're testing the upside, testing the downside, taking as much Bitcoin as they can from each other, from retail, whoever, basically the smart money. And retail can get in on this as well if they're understanding the patterns. And we've looked at the Wyckoff pattern but many times before, essentially just watching what the traders are doing, buying up low, testing high prices. If it doesn't work out, have some stops beneath critical levels like here and like here. And then if the market doesn't go your way, sell out on the way down. So Bitcoin at the moment is struggling to maintain this level. We want to see it hold $40,600 because that's the structure at this point. You can see the market has played pretty nicely to that 40,600. So coming into the close, another hour or so to go, that's where we want to see the closing price happen for BTC. Let's take a step out to the daily. You can see that big rejection bar. If you got this on candles, it'd be a nice wick top and bottom at this point. You can see that big wick to the upside, and yesterday also had a reasonable wick as well. So that's not looking good in the short term in terms of the hourlies and the daily charts. Weekly and monthly, we'll take a look at that as well. Essentially, just waiting for Bitcoin to get the hell out of this box. It's been tracking around in this box for the last 11 days. From the 11th of April when it dumped down, it's basically been playing around between the high 30s and low $40,000 to figure out who is going to win. The game of chicken continues after that 18th of April. That date is also going to be extremely important if you are short-term trading the market or if you're a long-term trader trying to manage your emotions. The emotions are going to come into play heavily, I suspect very heavily, when the market starts to test these lower side levels. Those prices are at about 39,000. And then when this market wicked down to fake out just 4 days ago. So that lower price is 38,500 as well. So 39, 38 and a half, pretty close together. Market will get very emotional at those times. Mark my words on that one. Now, why did this all happen? Let's take a look at the Nasdaq and the news that's come out for the Nasdaq. Fed officials discuss half-point rate hike. And of course, that is scaring the traditional markets. Viewers, you guys know we've been following the Nasdaq, the tech sector, and of course, the S&P 500, top 500 companies in the US. Of course, we'll get back to crypto, but we've got to know what's going on in the rest of the market as well. Because the correlation with Bitcoin and the Nasdaq is so uncanny at the moment that it's crazy. Look at the Nasdaq here overnight. It's crashed underneath its previous low, and that is the 18th of April. Remember, we looked at the 18th of April just a moment ago for Bitcoin. So the Nasdaq has fallen underneath that price. The good news for Bitcoin is that we have not fallen under the 18th of April yet. And remember, I said this is going to be a strong support zone. Well, it's an important support zone for the strength of the market. 18th of April, that has shown a low. The market is still above that. So that's the good news, that although Bitcoin is correlated to the Nasdaq, it's still holding up stronger than the Nasdaq in this short-term picture. It's holding above previous lows, whereas the Nasdaq is falling underneath those lows, which is showing relative weakness compared to Bitcoin. We can still look at the correlation. If Nasdaq goes down, maybe we expect Bitcoin to go down as well. It's pretty much played out pretty similar to the Bitcoin chart. Whatever the Nasdaq does happens on Bitcoin as well. Look at that lower top, market runs down, we get that fake bottom, bounce back. But like we just saw in this case, Nasdaq is looking a little weaker. So I suspect Nasdaq is on its way back down to come and test these levels. If it's not 13,000, maybe around that 13,500, we're not too far off that now. And that would be a major blow to the tech sector. And because Bitcoin, Ethereum, cryptos are tied, they're correlated to the tech sector, then they're probably going to experience some pain as well. Whereas the S&P, although we had the same sort of rejection here, we had the just overnight, pretty decent bar down, only 1.48% overall, but it was rejected at 50%, you can see, of this major range. So this is the correction range of the entire bull market. So that's the current correction. It's been rejected there, but it's still holding just above this move up. So S&P is looking stronger compared to the tech sector as well. So overall, we're looking for that macro picture of a bullish play. Months to years. That's months to years. Short term, I dare say we're going to experience some pain, especially if the Fed keeps coming out with these announcements of 0.5 point interest rate hikes and all this sort of scary stuff that the market perceives to be quite negative for it. And of course, the tech is going to take a harder hit. To the downside on the tech, for a big macro picture, still looking same price targets here because these take months to play out. Around 11,500 points to 12,000 points for the Nasdaq. Bitcoin, downside, needs to hold above these consolidation levels. Take these off the chart. You can see here, that's between that low 30s, around 33,000, to where we currently sit at about $39,000 to $40,000. Now, how does this hold up for cryptocurrencies? Let's take a look at the total cryptocurrency market cap, all of the cryptocurrency space, and get back to that 18th of April. 18th of April, important date. We saw that it's weaker on the Nasdaq. We can see that we broke through that just down here at this low. S&P 500, we haven't broken through that. So relatively speaking, tech is weaker. Now, to the total market cap, the 18th is still holding up. So if you have your own altcoin portfolio and you're thinking about what I should do about it, pay attention to your individual cryptocurrencies and what happened on that 18th of April. That's going to be an important level for each of those cryptos to hold up. Some might fall below it, some might only fall a little bit below it, but that's how you're going to tell about your relative strength in your own portfolio. Taking a look at, say, Luna. Luna's 18th, look how far down that is at this point. That was like a nice little bounce. It has been rejected at the 50% level, but provided this bounce holds up, say around the mid 80s, around $85 to $86, at the worst case scenario, I'd say about $82, then it could be a higher low forming, and then this market just sort of trending sideways and trying to hold out strength while Bitcoin goes on its own tear. Maybe it falls, maybe it just holds sideways as well. But that's the sort of strength that I'm looking for. They're the signals that I look for in the market to give me a sign of what is going to be weak and what's going to be strong. Checking these critical dates and their prices on those dates. So for the total market cap, we've been tracking what's going on in terms of the price. We've looked at the 18th. This was the consolidation level. You can see right through that zone there of about 1.6 trillion to 1.75 trillion. And the investors that had been trapped. So just looking at sort of, Wyckoff style analysis, where you had the extreme emotion during late March, investors getting trapped into their positions. The market then crashes through the support level and then traps people into their positions at a loss. And you know, from a psychological point of view, investors don't like sitting in a loss, especially new investors. They'll sit in a loss and just keep holding on to it until the market comes back to a break even, and then they freak out and say, I've got to get out of this thing. In this case, overall, the market hasn't got back to a break-even point and it's crashed again. So this could be some sort of scary psychological point for a lot of new investors where they might fear never seeing that price again. And that's what leads to a cascading effect of the market falling, whereas investors start to sell out of their positions as the market moves away from their either entry prices or their level where they thought they would have sold out at, but then they held on and held on and held on, rather than sort of taking that loss on the position. So we have multiple factors here playing into the market. The Fed talking about raising interest rates again, that's spooked the Nasdaq, it spooked cryptocurrency, it spooked Bitcoin as well. And then, of course, the psychological game of getting trapped in positions when the market has basically fallen away from the price that you originally got in after all of the excitement back in March, the Ethereum merge, Bitcoin looking to go to 50 whatever thousand, go to new all-time highs. It's going to happen in 2022. You name it, that narrative has been there for cryptocurrency, and it's beginning to die out a little bit. But the idea here is if the signal is invalid, then you need to see this market hold up at first above 40,600, work its way higher by maintaining this low. So this uptrend here, the low is on the 18th. That low for Bitcoin is 38,500. Get above 40,600 and then start to climb its way to 43,400 at this point in time with this range. And then, of course, work its way higher as well, all the while maintaining the lows and maintaining that uptrend. Now, we talked about the macro view earlier in the video. Let's take a look and recap the old days of 2021 when the market shot up from, that $10,000, $12,000, peaked, came back. Then we had a new peak in February, came back, and then a shorter peak in March, and then the ultimate top in April before we had a lower top and the market crash. Obviously, the market did move again, but you can see from history it wasn't that much higher and it was pretty much a fake out to the upside, looking at where the prices are sitting now. If we move this to a bigger macro picture, the monthly chart, can you see something similar to what has happened on these shorter term timeframes? We take a look at the monthly, we can see the big move up, the pullback, the shorter move up, the pullback. Is this in March? The March top, which we're now in April, which is a pretty small month, is this going to be that lower swing top? As I said earlier, it's going to take months to play out. You can see the move up and up again, and then that could be the shorter move here into that resistance point. So I'll just clean up the chart here now that we get the idea of what's going on, the consolidation, getting out of that yellow box, and the support levels that the market needs to hold. The move in terms of the Wyckoff distribution pattern happens on all time frames, and it's essentially the whales, any sort of trader, investor, just figuring out what is the temperature of the market. Are we feeling bullish? Are we feeling bearish? And at this point, this move up is still rather weak. It'd be lovely to see this invalidated. The invalidation comes from the lows holding out. The lows are at $33,000. And then obviously these lows holding as well at $29,000. And then breaking back above that midpoint around $50,000. Ideally, I'd love to see $52,000 get broken and then hold above that to invalidate the macro bearish picture for Bitcoin. I'm not calling it a bear market yet. It needs to break these lows for me to call it a bear market so that the trend then changes. Looking at the Gann swings, you can see the trend is still up. There's a low, a higher low, a higher low, and another higher low. So until those lows get broken, that's when I consider it a bear market, the trend to be broken. Now I hear it at the other end, it's been a bear market since the top. Sure, you could call it that as well, but we're looking here at a mechanical structure rather than just saying it's a bear because I feel like it's a bear. I'm just looking at it in terms of a technical viewpoint, looking at the macro structure based on lows getting broken. That's just keeping it mechanical and simple for an easy style trading plan. As always, we want to take that approach, stepping back and just having a clearer view of what's going on for our portfolios. As we saw over the last 10 hours, Bitcoin going from 43K down to 39K and now basically bounced back up to 40,500. Needing to get that close above 40,600 to maintain that short-term bullish outlook to go and test those highs again. In terms of the macro picture, we want to see those major lows hold up. The 33K, the 29K, want to see those things hold up. The best case scenario out of this is if we have cash coming in during the year, then of course we can just dollar cost average into the market as we see major levels of support come into the market. You can see those bounces, not just buying every dip, because you probably run out of money if you're just buying every dip. We still see it across Twitter. I bought the dip, did you? That sort of jargon. Look at those major support levels and what the market is doing from that. And remember to come and check us out next Friday afternoon, 29th of April, here on the sunny Gold Coast. Beautiful Friday afternoon. We'll have some drinks afterwards. The link to this is down below. It's going to help us look at the entire macro cycle over the next 5 to 10 years. Crypto, stocks, and real estate with my good friend here, Phil Anderson. I hope to see you guys there. It's our first live event, and I'm super excited, as I always love to hear Phil talk. And 2022 is looking like one of those great years of opportunity because the markets are fearful and things are quite uncertain. They're the best times to be getting yourself set for longer term positions. Remember, the links are in the top of the video description. Catch you guys at the next one. Like, subscribe, all that good stuff down below. Till then, peace out.